Edge is mathematically a higher probability of success. Let's refresh our high school math on probability. In a coin toss game, if I lose on heads and win on tails an equal amount, then after playing long enough, I would be where I started, which means no loss, no gain. Because the probability of a win or a loss is 0.50, so I have no winning edge in this game. I say I have an edge only when there is a higher probability to win. In this casino game of European roulette, there are 37 boxes numbering 0 to 36. If you bet rupees 1 on a single number and say you win by a roll of dice, the casino pays you rupees 36. That's a payoff of 36 times. And the probability of this happening is 1 by 37. So your edge here is 1 by 37 into 36, which is 0.97, which is less than 1. So you have a negative edge in this game. You may win initially, you may win for some time, but if you play long enough, you're guaranteed to lose this game. That's called a hard negative edge. Our stock markets are many times set up like casinos, where the edge is less than 1 for a retail investor like you and me. So the idea of an edge in investing is to find situations where the odds of success are higher and in our favor. Let's look at a few techniques to improve our edge in investing. The first one is to look at equity valuation index at the time we are investing. This could tell us how expensive or cheap the market is currently quoting. We could use metrics such as price to earnings or price to book, dividend yield, market cap to GDP. The idea is to be directionally right than be diagonally opposite. Here indicates extremely cheap valuation. Investments made at this time has the highest chance of making good returns. Or an expensive valuation indicates you need to book profits, preserve some of the money that you've already made rather than giving it away for the market. The second method is diversification across asset classes such as equity, debt, commodities, gold, and real estate. The best equity markets themselves are very different every year. Example, in 2015, Japan was the best performing market. In 2022, India was the best. Further, no single asset class wins all the time. Selling what has done very well in the past and buying what has underperformed in the past increases our odds of winning. This brings us to the third topic, which is rebalancing across negatively correlated assets. It could be equity and debt, domestic equity and US market. Let me show you how this works using this chart from DSP Mutual Fund Research by Mr. Kalpin Parekh. During this period 2001 to 2010, the Nifty returned 21% annualized returns, whereas the US market, here represented by Berkshire Hathaway, returned only 5%. In the next decade, the US market, again represented by Berkshire Hathaway, went up 16.8% in rupee terms, whereas the Nifty returned only 10%. The best markets kept changing. It is very difficult to predict the future winners. Now, if you did a 50-50 investing in both these markets, you will see that the absolute return of the US market, represented by Berkshire Hathaway, is 2,670%, whereas that of the Nifty is 3,113. Mathematically, the average of these two should be around 2,850, but a 50-50 split and rebalanced portfolio gave a return of 3,625, which is higher than any of them individually. This is because while rebalancing, we buy what has not done well in the past and likely to do well in the future. While selling what has done well in the past, we are preserving the profits from being taken away by the market. The other magic of diversification is that the minimum return of the rebalanced portfolio was a positive 2.65, while the individual portfolios themselves could have given a negative return. The risk of a diversified portfolio measured as standard deviation is also much lesser than those of the parts. As Morgan Housel said, the most important part of every plan is planning on your plan not going as per plan. No one knows the future. We can at best have smart guesses. Therefore, using tools and methodology to increase our odds of success is the best that we can do. And maths has answers here. I hope you liked this video. If you did like, please subscribe, like, and share it with your friends. Thank you.